Hi, I'm Scott, and this is Amber. Today we're going to talk to you a little bit about the differences between a future purchase option and a benefit update feature.
Contracts that offer a free increase rider, they do have some strings attached. You have to be mindful of the different requirements that are mandatory as part of the contract. So typically a future purchase option that is free is only offered once every 3 years. And in addition, you have to go through that checkpoint with the carrier. And if you don't participate in the checkpoint, checking in and doing the anniversary requirements, you can actually have your benefit increase rider or benefit update rider, or otherwise known as a purchase rider, it can be forfeited. So you really need to be mindful of every 3 years what your steps are, what you have to do to keep that satisfied as far as the carrier's guidelines.
Yeah, that's true. I often refer to it like this. When you buy an option, you control it. Whenever it's given to you, they control it. So you do need to be sure that your address is always updated so that you get mail that they're going to send to you. Make sure your email and phone number with your representation is updated so that when they get notices that they're able to get with you. But some BPRs, as we know, they've got a couple of little extra features on them that I do like, and I always like to make mention so that we don't miss opportunities or obligations as one might have. But they are simple things. You move from one job to another where you lose some group insurance. Mm-hmm. That's an accelerator.
Yeah.
That allows you not to have to wait for 3 years. If you have a large income increase, some contracts have a 20% or greater income increase to trigger them. Others have 50. Others yet have none. So it's important to really pay attention to what you're getting, because once again, free is free, but free doesn't really necessarily mean you control everything, and so you need to be careful.
One other thing to think about when you're looking at a future purchase option that is free, that sits on the contract for free, when you get to the point that you're actually eligible to buy more coverage, you have two choices, and the insurance company or the advisor should help you run some of these calculations. The amount that they propose that you're eligible for, if you don't want to take that increment, you must be at 50% of that maximum amount that they propose to you. And if you feel like buying something in the middle, you technically can, but then you're going to forfeit your purchase rider for future use.
Well, some calculation will fit in there and some of them won't, because the typical number is you have to have and maintain 75% of the eligible benefit. Some carriers will go down to 50%. Yeah. So it just depends. Once again, it's a matter of trying to explain to your representation what it is that you think is going to happen economically in your income, and tailoring a contract that's going to fit your growth model along with what your need model might be. Mm-hmm. We're big fans of buy what you need, option what you might want, but you need to be careful because sometimes those options may or may not fit. And the more foresight you've got into what you're trying to get accomplished will give us or any representative the best option to tailor to really be built for you.
So future purchase options, or the ones, the FIOs, the increase options you are purchasing, there's no right or wrong. It's really just what works for you and looking at the price per dollar and what your needs are. Would you agree with that?
Yeah, certainly the FIO process, where you're buying a pool of assets to be utilized in the future based upon financial justification, you get to control it. You might be eligible for $15,000 a month, and you might say, I'm not interested in 15, I want 6.
There's more control.
You've got the absolute ability to do that.
With FIO, there are no mandatory requirements, so that's another thing that might be nice for some of you. So that's another thing to consider as part of that flexibility that comes with the FIO, but there is a cost associated with that.
But as a side note, where you may not have any obligations, sometimes we find clients push that opportunity off, and sometimes they end up with a claim, and now they potentially are underinsured. So even though you may not have to do anything, you may not be compelled per contract, you probably still want to have a very quick review to understand what are your needs, and does your policy satisfy those needs if a claim were to happen.
So although there's no mandatory requirement, we recommend you evaluating that on an annual basis and just check in. The important thing to know is with the free purchase riders that you have to follow some steps depending upon certain years. You want to keep track of that. I wanted to cover some of the resources we have below in our description box. First, we have our disability insurance physician guide. This will cover the definitions of disability in more detail. Additionally, we have our vocabulary list and our physician disability checklist. This checklist is something that you can print or save on your desktop. That way, when you're doing your research on the different types of writers that are out there, you can keep your notes organized, and then you can figure out a way to structure your plan based upon your needs.